Hello everyone, hope everybody's doing good. I'm going to present to you some of the difficult chapters of the life insurance course, and for today we're going to cover the types of life insurance. So that's part one and part two, about 10 minutes each. Types of life insurance: there is a term life insurance and there is a permanent life insurance. And the term life insurance, we have multiple of them, but we need to understand and get the entire concept so that you can answer the exam questions. So the term life insurance can be a level term, a decreasing term, and an increasing term. And a term by definition is going to end at certain time in the future. It could be a 10-year term, 20-year term, and 30 years term. So a term ends. The word that we use when it ends is called expires. So a term expires, and it could be level, decreasing, and increasing. So each one has its own use. For example, a decreasing term can be used for mortgage insurance, right? For mortgage insurance, that's what we use, a decreasing term, because the mortgage amount is going to decrease throughout the life of the payment for the house, for the mortgage payment. So the second type of insurance that we use for mortgage is also called mortgage redemption insurance. That's a type of decreasing time insurance, life insurance, that we use for mortgage. So if you see in a multiple choice which of the following is used for mortgage, either it's going to present you the mortgage redemption or it's going to present you decreasing term. So you can choose from that. All right, the level, in the level term, refers to the face amount. The face amount is the death benefit. So level, when we say level, we are talking about the face amount. So this can appear on the multiple choice. It's saying what does a level refer to in a level term life insurance. It is the face amount or the death benefit that we are talking about. So when we talk about decreasing term, we are talking about the face amount is decreasing, not the premium, but the face amount. The face amount is decreasing, or the death benefit is decreasing, but the premium is level throughout the 30 years. So a decreasing term has a level term, right? A level premium. And that's what we are talking about. So, but the word level is referring to face amount, but the premium for increasing and decreasing can be the same fixed premium for the entire time, because it is average. So you can see multiple questions on this one saying that whether it's increasing or decreasing, what premium do you have? It's increasing, decreasing, but it's level. So for the premium, it's averaged out. Why is that the same? Because it's averaged out. So you can see multiple questions appearing on the exam on this one. The other thing to know about term is the renewable and convertible term. So you pay a little bit more on the premium, but you can make it renewable term. So you can renew it and then without proof of insurance. So the renewable and convertible is without proof of insurance. So you don't need to go through medical investigation. You just get approved right away. So convertible means it ends up into a permanent life insurance. So it's going to end up into a permanent life insurance. Renewable stays term. It just gets renewed. So renewable term is a term, but it gets renewed without proof of insurance. And convertible term converts to permanent without proof of insurability, right? There is no need to proof of insurability, so no medical, and then you can get approved. But of course you pay a little bit more on the premium for those two. So this one is what it's talking about, without proof of insurability. Allow coverage with no additional proof of insurability. So you can see, always think about renewable and convertible term to be no proof of insurability, so this can appear on your exam as well. So important concepts. And then a convertible term ends into a permanent life insurance. So always, right? We cannot say convert from permanent to term. There is no such thing. It's always from a term into a permanent. So the end product of a convertible term is a permanent life insurance. So sometimes you might see questions like, which of the following will end up into a permanent life insurance? So it should be a convertible term, right? Very important to pay attention to. Other types of term could be a credit policy. So credit policy is that you take a loan and then you want to have an insurance to protect that loan, right? So always a loan is going to, the face amount is going to decrease like a mortgage. So we use a decreasing term for credit policy as well, right? Credit policy. So the other thing to pay attention into a credit policy is that we can assign the policy to the creditor for a short-term period of time, just to cover anything happen, so they can take the money that's left, and then the other is going to be given to the beneficiary. So credit policy. What else is a term policy, right? A group life insurance is a term policy. So group life insurance is a company covering life insurance for the entire employee or a percentage of the employee. So all employees might participate if the company is paying all of the premium, right? So that group is a term life insurance. So it's going to end in the future. So which of the following is a term life insurance, right? So, and then it gives you, and then you can choose group as well. Group life insurance is also a convertible term, so you can convert it into a permanent life insurance up on termination of employment, and people have 31 days to do that. So 31 days to do that, but a group life insurance is a convertible, so you can connect convertible and then renewable with the group life insurance, and no proof of insurability is needed, but can be converted into a permanent life insurance. The other thing is that a term life insurance has zero cash value. It's like a car insurance. There is no cash build up in that. Anything that you put in, if nothing happened, the insurance company keeps the premium. If something happened, it's a big lump sum, so the amount are not equivalent. So it protects the family within that period of time. So let's see some questions from here. What insurance provides temporary protection but can be converted into a permanent without proof of insurability? Renewable term, convertible term, and level term. And the answer is convertible term. Convertible term can be converted to permanent without proof of insurability. Which type of a policy can be renewed each year after a year without medical examination? So without proof of insurability, the same thing. So they can ask you on each one, right? So which type can be renewed year after year without medical examination? Renewable term, convertible term, and level term. And the answer is a renewable term because it's been renewed, right? Renewed, but with no medical examination. All of the following are disadvantages of an annually renewable term life policy, except they love on the exam, except not. So you should pay attention not to make a mistake of something that you know. All of these are disadvantages of an annually renewable term life insurance policy. So the living benefits decrease over time. It is generally not renewable beyond certain age. The insured may be left with inadequate protection when it most needed. It becomes considerably more expensive over time. So the answer is A, the living benefits decrease over time. They don't decrease over time, right? So a renewable term, it gets renewed, but you pay more every time you renew it. Even though there is no proof of insurability, there is more premium every time, so it becomes more expensive. This is true. The insured may be left with inadequate protection when it's most needed, because a renewable cannot be renewed after certain age, right? It's generally not renewable beyond certain age. So a term cannot be permanent life insurance. So it's going to end, maybe 70, 75, right? So 80. So it's going to end and it will not be renewable after that age. So when it's most needed, there is no protection. But that's the drawback of a term life insurance. It's the least expensive, but it's going to expire down the road. Which of the following policy allow policy owner to obtain permanent coverage? Which of this will allow you to get permanent coverage? A renewable term, a convertible term, and a level term. And the answer is convertible term will allow you to obtain permanent coverage, right? Or in another question, it might bring a group life insurance. Yeah. So group life insurance will allow you to change it to permanent coverage as well. So that's questions that you might see in the exam, right? What does renewable term guarantee? What does it guarantee? Insurability, premium, permanent insurance. The answer is insurability, because there is no proof of insurability needed. So insurability is guaranteed in renewable, it's guaranteed on convertible, it's guaranteed on a group life insurance, but the premium increases, so premium is not guaranteed, and a term, renewable term, is not permanent, so permanent insurance is not guaranteed also, right? In a level term life policy, what does the word level refer to? The cash value, the premium, the death benefit. And that's what I was talking about at the beginning. It's the death benefit is level. So what's level is the face amount or the death benefit, right? So there is no cash value to a term, so A cannot be the answer. And then it's not the premium, but it's the death benefit, right? It's the death benefit. So that's it for part 1. Part 2 is going to cover permanent life insurance. It's a very important topic that you might see a lot of questions on the state exam. So stay tuned. Don't forget to SSL, subscribe, share, and like. Subscribe, share, and like. I hope this brings value to you. All right, thank you.